and then Gibby.
Welcome, everybody. I'm glad you could make it. It's our last MT Live of the year. We've done a whole bunch. Oh, every one of them, one better than the other. Anyway, today we're going to review what happened in the markets, and we're going to take a look into what was the junk, what was the flyers, and what will happen for next year. We'll take a look into that. So let's do it, Dan.
Wow, quick introduction today.
Pretty much to the point what we're going to be doing.
Well, you're right, but let's add a little flavor to it. We obviously will have a couple slides here. We'll show you our approach to look for opportunity and on any time frame. This is the end of the year. They have what's called, tax selling. We've been in a bear market, NASDAQ down over 30%. So I actually have a slide in here that when we did this last year, and we'll get to it, but we said in the same vein here, like what's our bias for next year? We're all here to learn and make money. And so we obviously have a different picture of the markets than we do this same time last December. And so the question is going to be, since we're down a lot more, and look at the title today, junk and flyers, or Greg, jokingly calls it dumpster diving. And what do we mean by that? We're going to spend a lot more time scanning today than other episodes. And I'm sure Greg's going to start with, the sectors and stocks that are crushed, that are down the most of the year. And that doesn't mean they cannot be on their way to bankruptcy. Junk is junk, but we're going to show you our approach to say, you know what, if this junk, based on our techno fundamental approach and multiple timeframes, et cetera, does X, Y, Z. So I want everybody to get pen and paper out or computer, notepad, whatever, because today's goal also is we want to build a big watch list for next year to make money. And whether it's a flyer or dumpster diving, we don't care what. We can make money on any compelling setup. You've seen this slide, obviously, if you've been with us for a while. This is our technical-based approach to trading anything that moves any time frame. No setup, no action. We start with a compelling pattern. Then we overlay our other concepts, which once you get, seasoning, I call it, it's just instantaneous. It's as soon as my computer populates the charts, I can instantaneously tell you if it's a high probability setup or not. But we obviously do them in stair-step fashion for part of the learning. So where is this price? Is it in connection with the trend? Is it on support or resistance? Which I'm looking at MJ here, which we'll look at, marijuana sector, has just been in the nastiest downtrend for a long, long time. So that's a perfect discussion for today. Is it junk or what? Multiple timeframes is always very important. That increases the odds of the trade on the time frame you're trading working out. And since we're probably looking for longer term trades today, Greg, I suspect not a 3 to 5 day swing trade. We'll be looking at daily, weekly, monthly, longer term charts also, because we want to see if we can, have some intelligent home runs. Broader market, of course, market internals. It's just a derivative of the last page. We're looking for a high probability setup. Then we just enter and manage per our trading plan. Greg, we're going to get into this today. So do you want to give them a quick little snippet on this three-legged stool?
It's hard to give a snippet on that, but it encompasses so much. So when we say intermarket analysis, it's encompassing currencies and commodities and different sectors and the relationships. Then when we talk about market internals, intraday internals, end of day internals, basically breadth and sentiment, how we're going to measure them. And then the technical part. So we call it three-legged stool. And then this evolved from just having a technical approach many, many years ago. Okay, is it going up, down, or sideways? Support, resistance, what's the pattern? And then it's like, what's the difference between this setup and another setup? And it comes down to the other parts of the market internals and intermarket analysis. Why do certain patterns that look similar, sometimes the same, act so differently? One sector versus another, or this year, right? This year versus last year. And as we go into next year, things will act differently again. So just looking at patterns is a start. It's not enough. And that techno-fundamental approach puts it all together.
Well, one small caveat, it probably is enough, but what this does is dramatically increase the probability of the trades succeeding. So swing trading, we're using the same approach as the prior slide, but we're using a smaller time frame. We're just looking for 3 to 10 day profits. The green room, they hear me saying, somebody may say, oh, Dan, look at the monthly over there. I'm like, are you kidding me? I'm in this for a 3-day swing trade. I don't care about the monthly. Position trading, same approach, but all it means is the time horizon. Position trading to us is the alignment of the pattern in multiple timeframes and price voids suggests that, look, this thing's just starting. I think it has the potential to hold for weeks to months. And we just call that a position trade. We're going to give it more room to breathe because we want a much bigger target. And we've had position trades short, obviously, as well as long. Go on your own, look at Amazon and Tesla monthly bearish breakdowns. Those were core shorts. Another typical slide of ours. This is the starting point. Show me one of these pictures. We have others, of course, but this is a pretty slide with 9 of them. Show me a bullish picture. That's the starting point. No setup, no trade. And then on the first slide, we're going to overlay all the other concepts. So on the three-legged stool, this was one of them, market internals. Market internals we use for timing purposes. And we have different levels, I would say. The coronavirus low, major bottoms, these just get cooked even more, the levels that we use for swing trading. And so here's the S&P 500 ETF, nice uptrend. And we use this for swing trading of when they're in alignment for potential turning points. They give us a heads up. Once they've done their job of giving a bullish or bearish extreme, you just put them aside. They've done their job. Then we're as always trading the chart pattern. Sentiment tells us, how are other traders and investors feeling via their purchase of call and put options. Calls, it's a reflection of their bullish bias. Puts, they're bearish. And then Greg has created this with these bands. He can elaborate if he wants. But notice here, a sell-off in the spiders. Sentiment. People, we call them the wrong way option traders because they load up on call or put options at the wrong time historically. So here they're loading up on put options.
A little bit more.
Yeah, please.
Meaning, so years ago, okay, when you start out and you see certain accepted static levels, as far as sentiment goes, which was 0.80 and 1.2. And so why these bands? Well, there are bull markets and there are bear markets. And what was a bullish extreme in one market is not in another, and vice versa. So I developed these bands. You can see here. So this was sentiment coming down to 1.2, but over here, it didn't. It just missed it. And over here, things were become more bullish. The trend was very strong. So these bands act as adjustments for bull and bear markets. And I've been using it for a very, very long time. It was through trial and error. There was no elaborate back testing as far as computers and all that. It works great. This is just a static McClellan oscillator, 100, 200. And the essence of this is to look for when investors and institutions are using levered instruments to make the biggest bang for their buck. And when they go all in, measured by these extremes, and breadth has reached an extreme, which is measuring how many stocks are trading advances versus decliners and looking at the difference between two moving averages, but it moves up and down like an oscillator. So when it reaches an extreme, plus or minus 1 to 200, and leveraged instruments are being used to get the maximum, meaning I'm all in. And I believe, with a very strong commitment that the markets are going to go higher, they're going to go lower. Wrong. And things tend to flip in the other direction. Not always on a dime, but we've been using this for decades, and it's extremely reliable when you use with the price as the final determinant to act.
This is just showing you the time frames we already talked about multiple time frames. Just a little basic slide. This is just attributes of trend strength. And so if we're looking for junk or flyers, we want compelling patterns on multiple time frames. And we use the term objective, which is the opposite of subjective. Objective means existing in fact. Okay, well, explain it to me. Well, these are strong. These are attributes of a strong uptrend. Unfilled gaps, controlled candles, red bars ignored, topping tails ignored, consolidates through time, 20 comfortably above the 50. You don't want to fade this. It's a strong stock. So as we're scanning, just keep that in mind. So this was all right. So this was in last year's MT Live on this subject. And we said last year, will the markets deliver the same? Guess what? They topped out I'm actually off a year. They topped out in January, within weeks of this slide last year. Go back and look at the spiders at 436. Go look at Apple at 180, and it's had a couple splits and so forth. That was the end of it. So again, I'm putting this just to set the stage for us. And Greg, as you well remember, in last January's advisory letter, using this techno-fundamental approach, there was a breakout failure, the internals, etc. You clear as day said, danger, danger, danger. This is, you didn't call a bear market, but you said, danger, danger. This is a breakout failure. Put on your shorting hat.
I could find it, but I think it was January 8th. And I said, going to be last year's market and trouble's coming.
Right. And so that was it. All right. So if we're looking to trade junk, this is just a slide of, hey, we're looking for bottom fishing. And so we're just in summary, I'm looking for a flat 20 and 50 to let it stabilize. I'm looking for some type of, I call shock event, something. You got to give me something to say that's that's an event. That the supply demand relationship is jumping out at me, and it's a short-term bottom. Whether it's a core long, we have to look at multiple timeframes, et cetera. So we'll be applying these concepts today, like take Tesla. Tesla is down a lot. So Greg, let's look at Tesla when we turn over, because that's a FANG and a Wall Street favorite, and let's apply today's knowledge of whether we think that's a short-term or long-term opportunity at the right time. I'm just showing you this because when we're looking for bottoming patterns, these retest W bottoms have the best success. You want the momentum move down, a shallow bounce, and you have some flavor of retest in a price void. These are great patterns. I grabbed these slides over the weekend. So I'm looking at MJ right here is the marijuana ETF. Look, this is, remember the slide I showed you of bullish uptrend? This is a bearish downtrend. And so some people, Greg, might say, you know, I'm looking at MJ right now on my screen. It's $4.03. They might say, well, that's cheap. It's cheaper than $35. Should I buy that for next year? Well, let's apply our approach, and there's absolutely no pattern. This thing is horrible. Horrible downtrend, green bars ignored, shallow retracement. Here's Bitcoin. I grabbed it over the weekend. It's probably the same. Monthly chart, that's a bear 1, 2, 3 continuation lower. So do I want to bottom fish saying is Bitcoin cheap right now? Not based on our technical approach, it's not. But we're going to do a lot of scanning. So that's what we're going to do right now. Market review and scan for junk and flyers. Our strong stocks, which has been oil this year, are they going to continue to perform? Or am I looking for the bottom fishers junk or anything else that shows that we find during our scanning here momentarily? So, you know, I like saying that one of the amazing benefits of trading is I can take my laptop anywhere in the world, fire it up with internet connection, and we have the knowledge to look for trading opportunity on the time frame that you're trading. So we're going to start with that. We're going to start with, all right, let me see what's going on. Let me develop a bias. You know, Greg can look at whatever he wants here on market internals, intermarket analysis, and then we use TC2000 for scanning. We'll answer anything that you would like. Otherwise, we're just going to plow through and search for opportunity. This is our best offer of the year on our online seminars, our 3 advisory letters, and our live green trading room. It expires the end of the year. mastertrader.com/holidays. Check it out. Email Greg or me with any questions.
Okay.
All right, we're purposely leaving a lot of time for scanning on this session.
All right.
But yeah, we should look at Tesla because that's a Wall Street favorite. But yeah, go maybe start as you're doing with the broader market. Sure.
I'm just putting a link there. I'm presenting there next month. So I picked this page so we could look at a broad amount of sectors and stocks in different timeframes. And we're just looking at what happened for the year and what did the best and what did the worst. And these are the ETF sectors. Only one sector up on the year, energy. Can it do a repeat next year? Well, so we'll see. We'll take a look at the charts. And the worst performer was communications, And the second worst performer was consumer discretionary. So from an into-market perspective point of view, consumer discretionary doing so poorly is reinforcement of a bear market. And you've got different opinions, recession, no recession. But when the consumer doesn't want to spend money, that's pretty supportive of a recession and a bear market. Now, we can look at the stocks within those. So I think initially this is on the S&P 500. So just take a look at that yearly changes. What did the best? Occidental Petroleum. And it's well off of the high. But you can see monthly chart, it's been chopping sideways for quite a while here, but it actually started to move up in 2001. And then it continued it in 2002. And if you've heard me say it once, you've heard me say it 1,000 times. Look to the left. So when we say, well, can this continue into 2003? We say not to the same degree that it did before, and to a pretty high level degree, the expectation is it's going to underperform. Right. Whereas in 2001, if you said, hey, can this continue into 2022? I'd say, well, it's still got a tradable void until it reaches this resistance. I think that it could. So it's really common sense. We look to the left, where's support, what's resistance, the trend. And then as it gets closer to this area up here, and we always look at it as an area. So I usually do something like this and say, okay, somewhere in here, it's going to stall. And you see it's been chopping around there. And then, you drop down to smaller time frames and say, hey, is it retesting? Did it break some support? And there was a lot of jiggles. It hasn't been, you can see over here, it hasn't been doing too much for a good part of the year, but still the best performer in the S&P 500. And another
that was a phenomenal starting point to today's session of scanning, because people would ask, oh, oils, and their brokers, if they use one, could be telling them the same thing. Hey, Mr. Smith, oil rocked this year, and I really think you should put a big percent of your portfolio in it for next year, because we think it's going to be a continued winner. Well, based on what? And so you made the comment last year, we would say, yes, this looks fantastic. And this year, no, we would not recommend that as a long-term position for next year.
Yeah. And Hess has made new all-time highs. There's another oil stock up here, and then another oil stock, and this one broke out. ExxonMobil, new all-time highs. But over here, it was way down here. And so when we talk about long-term, well, we look to the left and say, hey, something's at support. It's come all the way down. And then we start looking for bottoming patterns. So this monthly chart, well, we could look at patterns. I purposely put it on a line chart, because when it comes down here, right, just like it comes up here, you expect it to stall. It broke out. But here, you start going down to smaller time frames, and let's see if we could line that up. And now we start looking for little retest patterns. So we look for specific patterns. We might call it a head and shoulders bottom. We could call it a W bottom. We don't know which one is going to line up, but this gives us a bias. Then I'm done with here. Now we can go down to smaller time frames and repeat.
And I'm sure your techno fundamentals confirmed a bullish bias on oil at the time.
I don't remember, but when we say how do we reproduce consistency? Meaning, how was it so accurate to say at the beginning of last year, when the market was so bullish for so long? And it wasn't about being so long, because you could have said it 2 years before. It's been going up for a long time. But what happened was there was a shift. And I had said it throughout 2021. I said, when short-term interest rates break out, we're looking at a 13-week chart of interest rates. I said, when this thing breaks out of the highs, trouble is going to start brewing. And that's exactly what happened.
Right.
Why we keep an eye on interest rates, short-term and long-term interest rates. And recently you've heard about inverted yield curves this year, but see, these part of what we do that is really no different than other professions is that there are certain, let's call them tools, things that we need to do our job. And sometimes that specific tool about interest rates, it's just kind of hanging out there in the background. It's really not affecting the market in a big way. It's just, but you're constantly keeping an eye on it. Probably some in the green room was saying, Greg, yeah, you told me look out for this chart, but it's been 6 months and it didn't move. Well, now it's moving. You're going to pay attention, but now I made you aware of something that you could utilize for the rest of your life. So these yield curves, what'll happen as we get into 2023, we all know what we've been told is the Fed is going to continue to raise interest rates, but at a slower pace. And eventually, at some point, things will get worse and they'll start to loosen up. And you have to keep an eye on these intermarket relationships that'll tell us that the beginnings of a new bull market will start. So, that's like a very broad perspective of what's going on and looking at, again, different sectors. So oil has done the best. Communications has done the worst. It's a pretty tight race there to the bottom with a few days between consumer discretionary and communications. And you can see communications here, same thing, sort it. What's the worst one? Match Group. All right. It just keeps going down and looks like it can continue to go lower. Meta looks like it's going to roll back over. Let's see if it breaks here.
But I want to make a big list for me and other people. Set an alarm over last week's high.
Well, right. It's, whether it's there, just setting alarms and saying, okay, for a month and over here, if it breaks below these lows, well, it may be going down. And I could have put a note there. It looks like maybe it can go to $50. I don't know.
Right.
But it is extended, but there's no support here because it went up as it did back then. And now it's just going sideways on the weekly time frame at this resistance, and it can't break out. So it's stay away from a swing trading perspective. It's not doing anything. And so as we go through all of these, and that's trending down.
It's horrible.
Like Netflix rolling back over. So if Netflix was to come down here and do a retest, and we can set an alert, which we're, setting alerts, set that up for a month. And I'll put here possible retest because it might happen in a month, 2 months. And that'll give me a little reminder.
Greg, if you can answer B, she has a great question.
How many months of data on the daily charts to look at to be able to make a decision? You don't need a lot, 3 to 6 months. I mean, if something is trending and there's nothing to the left, maybe you'd look further. But as I'm looking at Netflix here, I don't need anything more than what's on this couple of months. So as you're looking at information, right, you might say, well, if I'm only looking at the daily chart, well, I don't need to look at anything more here. But if you didn't see anything, there's two choices: either squish up the data or go to a higher time frame. By looking further to the left, what you want to see is what's there, because you don't see something on the smaller time frame. What are you going to do with 2 years of this?
Well, I'm looking at Oxy monthly right now, and because that's what I have on my laptop over here, and 2 to 3 years, I like.
I think it's useless because this is in a trading range.
Well, it helps me for the void and the trend.
Whatever. I get that, but there is no void. It's in a trading range.
No, I
So
know
if you
it is.
you look at the chart,
Right, but when it broke out in January 22,
all right, so we can go around and around. It's the same thing. If you're over here and there's nothing to the left, you're either going to scrunch it up or you're going to go look at a higher time frame. It's black and white. Because if I don't see anything here, I got to look more. That's the bottom line. Now here, if it breaks the lows, we're just going to, okay, maybe it's going down to the next low. So if you're doing longer term B, maybe you just want to use monthly and weekly timeframes. And once you've created a bias based on that, you could zero in on the daily, saying, I think it's going to go up. Now you want to see more detail to say, what's my entry point? All right, so TMUS has done the best, up 20%. Now, consumer discretionary, you wanted to look at Tesla.
Yeah.
And Tesla is the worst performer in that sector, down almost 70%. So as we look at Tesla and say, well, it's broken this support, and there's a little shelf right there, will it hold? Right? That's the question. That's the unknown. Now, you set an alert on that line since you have a little support there and wait for it to get down there. And so far, it's holding here today, but it has yet to break above a prior day's high.
Yeah.
At all. And so it tried to bottom this morning. We're not going to intraday charts, but you get the idea of just continuing the repetition of this is trending down. It's trending down, right? 20, 50, 200, all time frames. There's nothing to the left here of any significance. And at some point, it'll turn around. But all these EV stocks are getting killed. This one was recommended today for something, I don't know, but it's at new all-time lows.
Wow.
Right? It's gotten killed.
Wow.
So consumer discretionary, and this did well for a little while, right? Earlier in the year, now it's getting killed again. Entertainment dropping. So what will do well next year? Well, this is outperforming right now. Casino and resorts, it's down here, trying to build some support. You got a bit of a rounding bottom here, and I won't move it up there, but same thing. That's where resistance is, and it's made this rounding bottom. It looks like it can go up. As we look at the daily time frame, it's just stalled here, and we've got a little bit of a shock pattern where it tried to go up and it came back in again. So I don't know what it's going to do, but maybe it's just the broader markets. Just the markets here, they're trying to turn around here from this morning's, looking at my other charts, the other moves down. And as we look at this, technology, this had, getting killed this year because of interest rates. Now we need to see. So as we go into next year, at some point, we would assume that technology, because it's a leader as the market turns around, as we move into a bull market, which we'll need to see interest rates start to back off a little bit, which, they're not today. Right? See, this pulled back. We talked about this earlier in the year that, as this began to pull back and the markets had a little bit of a lift off. We talked about when it get down here, it would turn around, the markets would have a little trouble, and they have. And so we're going to want to keep an eye on this year. This was a deep retracement. What's going to happen over here? Marching, does it continue to march up? Does it make a lower high to roll back over? And this will give us some guidelines as to what's happening in technology. Is that if this 10-year begins to roll back over, we don't know if it will, but that's the intermarket relationship, which will support this starting to bottom out, which it's not yet. Maybe it needs to come down here to this little flip that it had right there, give or take. But this is going to be one of the biggest opportunities of next year, because technology will always do well forever, meaning because technology is always changing. And as that evolves and different market environments change, money will move back to technology because that's the future. And we all know about semiconductors, which is a subsector of technology, which has been, gotten killed all this year. And at some point, this is going to be a winner. So what is done part of the worst this year? Not maybe the worst, but whereas XLK down here, down 30%. You teach taking profits along the way. Well, from a long-term perspective, and it depends on what we'll be looking at, but in our ETF letter, we will be recommending SMH and XLK. Now, from a point of view of this turning around, will we want to take profits or will we want to sell covered calls? Because if this is going to be a turnaround, a theme for next year, we don't want to cut it short.
Well, Greg, you might have missed one of B's earlier comments. She says she's been long since the $40 range. Hopefully. And so it gets into your trading plan of how you want to trail pivots on what time frame, and then, as Greg just said, selling covered calls against it.
Everyone, look, when you have something that is trending, how do you know it's trending? Well, Dan mentioned the word pivots, and we define that as a bar with 3 higher lows to the left and right, or 3 lower highs to the left and right. When you see something that is moved up rapidly like this did, and there's no pivots, or there are very few pivots, and this was coronavirus, which was, they were going to save the world, and they basically screwed it all up. And they basically shot all their bullets by spending all of that money, which could have maybe extended a bull market for longer, not to have this current bear market, but, they spent all that money, they put so much liquidity into the system, and now it's a big problem. But when there is, little to no pivots, that's what we call a price void. And that opens up the door to a deeper pullback. Now, just having a void isn't enough. That's the technical part. But if you have a void and you have techno fundamentals, yield curves beginning to come together or invert, that's a problem. Meaning you have the potential for a disaster. What is a disaster? I think losing 30, 40% of your money is a disaster. And when we talk about degrees of disasters, well, how about losing 70%? And there are other stocks that are down more than 70% this year.
Sure, like a coined. Yeah.
So a little bit of more of a specialty, but this from $300 to $30. I mean, that is life-changing. And for those that have no idea, what they're doing or how to manage their money, which they would never dream of doing anything else other than in the stock market, of getting into some profession without any knowledge of money management. But People do that when it comes to stocks. And, where will this stop going down? It's impossible to tell.
Exactly. No idea.
There's nothing to the left. But if you understand the concept of a pivot and range expansion bars at some point and climactic patterns, and this is not climactic. That is the troublesome part. I mean, as this is going down, these bars are relatively equal in range. And what typically happens near the end is it collapses. Like where this could have been, oh, maybe it's near the end and it forms a pivot and it creates support. So at that point, we could say, you know what? The momentum to the downside began to slow, right? That was strong momentum. And now the low became closer and it formed a pivot. And then it formed a higher pivot low. And it's like, oh, maybe. And so at that point, I wouldn't fault anybody, or myself included, to say, hey, here's a green bar at a pivot. Let's buy this above the high, not on a gap. Let's buy this above the high with a stop somewhere below here. Luckily, it never triggered, but that would have been a reasonable thought process to say support was being created. I know it's in a downtrend. The momentum was slowing. Let's see what happens. And it failed. And now we really need to see it begin to accelerate lower. So we have what we call a thought process. And the thought process is it going up, down, or sideways? Is there anything to the left? If it's going down and making new lows, in this case, was momentum slowing down? Was it building support as this was? Can it clear resistance? Now, General Motors, the momentum picked up to the downside again. Where's support? Right down here. Well, will it hold or will it be going down lower? Well, so you've got this big area of price support there. So when it gets down there, we'll start to watch this and see what happens. What's happening into market relationships? What will Tesla be doing and other EV stocks, which have all been getting killed? What about Ford? Right? That's breaking lower. And we just continue that process. Okay, interest rates. If interest rates continue to go up, Home Depot is not going to do well. But if they begin to roll over, we're going to want to take a look at this. You can see it's kind of a breakout failure here. So is that I showed you that 10-year before. If that continues to march up, this is going to come down because the cost of money is going up in Lenore. If that 10-year keeps going up, this is going to start to pull back. So you'd need to keep an eye on what's happening with interest rates and yield curves and these intermarket relationships. How is that affecting construction? How is that and home builders? And of course, the price of oil, what's happening there? Don't mention in there, what about refineries? Refining margins remain high for the time. Well, things change. Maybe they'll do well. But look, this is what we do at Master Trader. And so while we use different instruments and use different time frames to take advantage of price movement, knowing what's happening with interest rates and commodities and currencies like the dollar, which has been a big thing this year. And then it rolled back over. And so as this was going up and interest rates were going up, it was bad for the markets. Now this has been coming down and the markets are moving from a focus of inflation to one of recession. So as those relationships and that focus begins to change, these intermarket relationships will change, so that they're not always black and white. And that was kind of a frustrating thing for myself, learning about intermarket relationships long ago, because part of the problem is that we're human. What does that mean? Human nature wants consistency. That's what makes us feel secure. Markets aren't built that way. Well, yes, recession means stock market goes down, B. And so at some point, the stock market and the way it's acting recently, and we can look at the markets, and you can look at, the NASDAQ here is near the yearly lows. You can see this looks like it has the potential to keep going lower. And I don't know that it'll get down to 200, but there's no support because of the way this went up. So what we'll be doing, right, is we'll see what happens at support. Does it begin to hold here? Do we get any wide range bars, some power bars, or does it keep, it'll stabilize here for sure. And we'll see what it does. Does it go sideways, and then does it break lower? Yeah, this is just hanging here. Over the last couple of weeks, we talked about the angle of retracement and how bearish this was. This is one of the attributes that we teach in the course as far as trends. So it's more than, is it making higher highs and higher lows or vice versa? How did it come down? Did it come down softly, or did it crash coming down? And then what happens? What was the reaction to a bottoming tail bar? So far, it's been muted, which is not good, which is suggestive that if it breaks this, it'll continue to go lower. And as it breaks here, it can keep coming down. And look, I've got this green area down there. We're just going to see how low this thing goes. So what will happen, right, as what the recession, do transportation stocks continue to go down? That'll be a good indication. Do consumer discretionary stocks continue to go down? Right? That would be reinforcement of a bias of a recession. What are interest rates doing? And at some point, we all know that the Federal Reserve, and they, with a target of 2% of inflation, they're not even close. So it cannot, the beginning of the year cannot be that, hey, the bull market's going to start at the beginning of the year. That's not going to happen. More likely, it's going to be worse at the beginning of the year, to where maybe we get some kind of a climactic move, and the idea of a soft landing kind of evaporates, right? Because where's the miracle going to come from? They're not going to lower interest rates. It's impossible for them to do that, because they're not even near 4% yet. Are they going to say, and that will be really interesting, something to listen for next year? What if they say, hey, you know what? We don't think we're going to get to 2% in the, we don't know when, but our target is going to be 3% or 3.5%. I don't know how the markets will react to that. That's kind of like they're throwing in the towel, and there'd be a whole another adjustment to inflation being at a higher level. And why were interest rates even going up during the year? Well, because with this inflation, because lenders didn't want to lend you the money. They said, if you'll take the money, my dollar is going to be worth less when it comes back to me. So I have to get a higher interest rate to make up for that. And so now we're kind of like in limbo as to what's going to happen. Well, why you inverse ETFs? If you're trading in an IRA and you need to be long, inverse ETFs are the answer. Sure. Right. SOXL, SO.
Yeah, the SOXL. Yeah, the semi's inverse. Yeah.
Right. Here's inverse. Inverse ETFs are fantastic.
Yeah.
Yeah. just trade, right? Just like anything else, bottoming action, look, breakdown failure, red bar ignored, coming up into resistance. It looks like it's going to keep marching its way up. Look at the weekly chart. Looks like it's going to continue to go up. I guess these are reverse splits over here. So Biddo mark is, when that came out, I thought it was going to be something to trade. And then I was told by Interactive Brokers that it's viewed as a derivative. So you had to get permission to trade derivatives. But, there's so many other things that you can trade related to Bitcoin. And, coin, well, it keeps going down. I mean, that's very liquid at some point. It's an exchange. It should do well. And there's plenty of other things.
Well,
So I don't know about Bitcoin.
Well,
Ditto.
but here, look at these in the space. Riot, Mara, Mr. I mean, they're all getting killed.
Yeah, $3. And from 50 to $3. And if you don't have a money management plan, you're going to get destroyed sooner or later. It's sad because, Dan and I have been doing this a long time, and it's sad to see, people not make it in this business because they don't have an idea of money management. So focused on, making the money before, the education and the experience, the whole thing in the cart before the horse. Trade 10 shares. Right? It doesn't matter if you could trade 1,000 or 2,000. You get the experience to know what you're doing. Like anything else. TBT, right? Interest rates, and TLT is bonds, but they're trading vehicles. If you want to get interest on your money, go buy a corporate bond that is going to mature. A lot of people don't understand that when you buy a mutual fund or an ETF, there's no expiration. So if you want to get yields, like whatever it is, if you buy a 5-year bond, whatever happens with prices, you're going to get your money back as long as you're buying a BBB bond, AA bond, you're buying a corporate bond, whatever the yield is to maturity, you're going to get that, and you're going to get your money back. If you buy TLT, right? If you bought TLT over here, right, when are you going to get your money back? Maybe never. Whereas if you buy the actual bond, you're going to be fine. Chinese stocks. Well, it depends on the Chinese stocks. I don't know those symbols that you mentioned. HKG. No more. But Baba. I don't know what, just technically, maybe it's bottomed out. Yeah, it may be. So how do you tell if something is bottomed? Well, first thing, you look to the left, just like we did with oil before. And we see that it's down here where it started its advance. And bottoming patterns have a high tendency to make very strong moves and collapse again. Part of the process. Now, it's been struggling at its 200. So if the market does take a dive in the new year, odds are this will too. And maybe if it comes down here and starts this rebuilding process again, and you look at your line chart of the, on a monthly chart, and this comes down and makes a little W bottom, it may be a great buy down there. Just like, whether it's Google and at some point Apple, Apple people, they're going to come back for this, but maybe it's at 110.
All right, that looks topping.
You can, yeah, right there. You see that topping pattern there, and it's lower highs and lower lows. So, coming down here, and the idea of a void, the way this went up, there's nothing below here. So it doesn't mean it has to come down here. It doesn't. So we have a concept called creating support, which starts with a pivot. And this began to create support here. And then it broke lower. And so as I scroll this back and I see Apple breaking here, what's going to stop it from going down? There really isn't much. And these lows right here, while they might, right? So we'll just put that there as a reference point. And there's a pivot there. And at some point, it's got to start its bottoming process. It's got to pivot, which will go back down to the daily time frame, and it'll pivot, and we'll get some kind of retest. And then we'll look at our market internal gauges and say, are they signaling that things are going to turn around? And we turn that whole process around. So it's a lot of information, but what I would strongly suggest is utilize our holiday specials and subscribe, get an annual subscription to the advisory letter, which we update this right, on a weekly basis. On the weekends, we go through techno fundamentals, we go through sectors, where's the money flowing into and out of, different trades, swing trades. And this year, because, bear market, when we think of core trades, it's really from the long side. And it is for me. And I think, we talked about before that those technology stocks are going to be making bottoms later this year. And they're going to be tremendous opportunities because, as I said, technology is the future and the evolution of that. And money is going to flow back into them because institutions know that's where they're going to get the biggest bang for the buck. And that is what they're going to do. And they're going to do it sometime next year. So join us. Consider one of our courses. Definitely the letter. And let's kick it in 2023. We'll
Awesome.
talk. Bye-bye.
Thanks so much, everyone.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.